Martingale, a strategy that people either hate or use every single day. My name is Xander, and today I'm going to test in real time whether Martingale actually works on the pocket option platform where we are right now. No editing, no textbook theories, just raw trading. Plus, I'll show you the signals from my own bot, which I personally use along with members of my team. Just to confirm, we're on the pocket option platform. I can refresh the page to prove it. We're trading on a real account with a current balance of $32,000. Let's get one thing straight right from the start. Martingale is a tool, not a magic button. It can either grow your deposit or destroy it in just a couple of minutes, sometimes in just a couple of trades. My goal in this video isn't to sell you a fairy tale, it's to show you how it actually works under the right conditions. Today I want to show you simple entry strategies, demonstrate exactly how Martingale is used, execute several live trades, and explain how my bot helps in the trading process. The strategy will be extremely straightforward. We won't be using any indicators. There are a couple left over from my previous video, but we're removing all of them. We're setting the chart type to candlestick with a 1-minute time frame. Let's select highly liquid pairs. These would be Euro USD NIC Euro against the US dollar, then GBP USD minus British Pound against the US dollar. And let's look at Euro GBP. Actually, Euro GBP has very low profitability at 28%, so let's skip that one for now. So we've chosen 2 currency pairs in total, and we'll be working with them today. For expiration time, let's set it to 1 minute initially. We might increase it to 5 minutes or more as we go, but for now, we'll stick with 1 minute. Let me switch over to TradingView. Here you can see the 1-minute time frame clearly displayed. I've switched here so I can draw a bit and show you how everything is structured. Let's imagine a scenario where we start trading using the Martingale strategy. What does this mean? It means that each subsequent trade will be at least twice the size of the previous one. At least twice, not exactly twice, but at minimum twice. Let me explain this in simple terms. I'll select white as my drawing color. Let's say you open your first trade for $1 and you lose it. The trade turns out to be unprofitable. As a result, your accumulated loss is $1. Then you open a second trade. Depending on the payout percentage, which could be 78%, could be 92%, somewhere in that range, you open the next trade for $2 to $2.5. Assuming this trade is also unprofitable, your accumulated loss becomes $3.50. This is after just 2 trades. The third trade becomes your decisive one. Let me explain what this means. For the third trade, you'll be putting up approximately $6. This trade is your final one. What I mean is, you cannot go beyond this third trade with further doubling. In other words, if you think you can keep going with $12, $24, and so on, you cannot do that. I'm crossing this out. You absolutely cannot go beyond the third trade. Now let me explain how to calculate exactly where these numbers come from. Minus $1, the 2 to 2.5, and the $6. Let's work through this. The final outcome for the third trade is either positive or a loss. In case of a loss, we have a total loss of $6 plus $3.5. Our total loss amounts to $9.50. That's what we lose. That's it. Now, let's consider the winning scenario. Hold on a second. If we win, let's say on one of the currency pairs, for example with 92% profitability, that means plus 92% on these $6. The total return will be, let me calculate this. We add 92% to the $6, which gives us $11.52. This is the amount that returns to our balance. Moving forward, how much of this is actual profit? Well, not all of it, because this is essentially the accumulated total. Let's continue calculating. We need to calculate the delta. The delta is calculated as follows. We take our $11.52. And from this we subtract all the funds we invested. Our trades were $6, $1, and $2.5, minus a total of $9.5. So ultimately, we get 11.52 minus 9.5, which gives us a net profit of $2.02. This is our pure profit, what we actually earned. If the third trade doesn't work out, we stop. I repeat, there's no opening at any cost mentality here. Most people blow their deposits not because of the strategy itself, but because of the absence of stops, the absence of knowing when to quit. Now here's the point, the last thing I haven't explained yet. How do you choose the size of your initial trade? You need to look first at the final amount where we reach maximum loss minus $9.5. $9.5 is the maximum we can lose over 3 trades. I follow the rule that no more than 5% of your total deposit should be at risk in one trading session. So let's calculate this. To figure this out, we need to divide 9.5 by 0.05. 9.5 divided by 0.05. The result shows us that the minimum balance you should have for safe trading is $190. $190, and you can trade comfortably. You'll have enough buffer that, and this is unlikely to happen with a smart approach. You could have 20 losing sessions in a row, 20 unprofitable sessions specifically. When we calculate this, these 5% include 3 trades, so 3 times 20 means you can open 60 trades total, something like that. This is probably all the theory you need, the simplest, most understandable explanation, so you understand how this works and how to use it properly. Now let's move on to the actual trading. Let me set the deposit amount. I'm going to let me see here. Let's set it to $50, and let's say we open a sell trade here. There we go. Our first minute has started. Let's wait for the result. In this case, I traded with the trend. Here, we can see the movement. While I was explaining on TradingView, the movement already happened. We entered downward with the trend. Pretty simple, intuitive. I don't know if this will close in profit or loss right now. It's very close. It's generally advisable to trade on actual financial market instruments, not OTC, because they have greater liquidity. The trade closed in profit. Alright, good. Let's look at another one. Euro USD, the situation here is absolutely similar. Let me show you something. I'm opening Telegram. This is my channel. You can check it out. Take a look. I'd appreciate it. Opening the bot, we go into X-ray signals. We need to look at, let's say, Euro USD from a calculation standpoint. The bot is configured so it doesn't give signals shorter than 5 minutes. Here, it's 6 minutes. We open the sell option. Let's open another sell trade. Here it's showing the overall trend. You can see here, I'm pointing with my cursor from this point at 9 o'clock until 3 o'clock, there's been a price decline. It calculated the tendency in a longer term perspective. We, on the other hand, are doing more scalping. We're working on a smaller time frame on 1 minute. I rarely try to trade blindly because in most cases, I actually use the bot. It really helps. Here you can immediately see the analytics on the signals. The trade closed in the negative. Okay, we're opening 2 more trades at a loss. Ideally, while I was talking, I should have opened the trade a bit higher. I should have opened it right here. Really? But I opened 2 trades here like this. I'm speaking completely calmly because the size of the deposit as a percentage of the total deposit is genuinely small. Therefore, there's much less stress in this regard than if I were opening a trade for $1,000 or a couple $1,000s. Moving forward, while the trade is running, here are the technical indicators, moving averages. A total of 130 indicators are analyzed. That's why you can control risk through this. This is why Martingale is genuinely a good tool. Look, trades 1 and 2, plus $186. 186 minus the $100. We lost gives us a net gain of $86. Moving on, we've already looked at these currency pairs. AUD CAD, Australian dollar, Canadian dollar. This one's a bit more interesting here. We can see a certain level. I'll even mark it like this. Let me do this one more time, more like this, and we're opening another sell trade. We can also use the analysis again. Our currency pair is Australian dollar and Canadian dollar. Again, a sell trade. Overall downward trend, we're seeing 70 sell signals. All moving averages point to selling. So why is this necessary overall? You cannot trade against the trend here. If the overall trend is bearish, there's no point opening a buy trade. That would be a pretty disastrous situation. You need to trade with the trend. You know, I'm opening trades right now. The deposit is small. And another trade just closed, plus another $46 profit. This is interesting here. The price is moving sideways. Let me mark some small levels. First level, second level. You know, the price is moving in this small corridor here. Here I would use the bot again. There's nothing wrong with that. It's a tool that helps you. It helps analyze trades, helps find the right entry into positions. Let's open another sell trade. Done, and we wait. Martingale works. But it works only under what conditions? This might actually be a good moment to open a trade right now. Lost my train of thought. It only works with a limitation, a limit on steps. Trade 1, trade 2, trade 3, third loss is a stop. That's it, you've lost. Don't continue to make 4th, 5th, 6th, 7th, 8th coverages and so on, because your deposit will explode. You'll lose it completely. Let's see, right now, most likely, here we're opening 2 small sell trades. Then yes, you must have discipline. If, for example, you open 3 losing trades, specifically 3 series of losing trades in a row trading stops, and you need to look for proper entries, this bot is not a money printing button, as many might think. Please don't think that way. It's a tool. First and foremost, it's a tool that you must use. You must know how to use it properly. This is very important. And here, I just opened the 3rd overlap trade. The price reversed and went up. Let's switch to a higher time frame and see what's happening here. What's going on? 1, 2. So, well, let's see now what could potentially happen with the price in the near future. Only 20 seconds left already. Let's switch to a 5-second time frame and watch the end of the trade. There we go. The trade closed in profit. We have an overall gain from these 3 trades, and we've covered the losses from the previous 2 unsuccessful trades. You need to use this carefully, practice and test it. The bot is completely free. You can use it as well. I'm doing all of this for my subscribers, for my audience. Use it, learn and earn. I'm not asking you for money and I don't need it. As you can see, I already have quite a lot myself. All the best to you. I wish you profitable trades and greater success. See you tomorrow in the next video.